XRP is in free fall, down 62% from its all-time high. Whales just dumped $1660 million onto Binance in a single week. The Federal Reserve's incoming chair is threatening to drain liquidity from the entire crypto market. And right now, traders across the world are asking one question that nobody wants to answer. Is $1 the next stop for XRP? Stay with me, because by the end of this video, you are going to understand exactly what triggered this crash, is actually behind it, what the Federal Reserve has to do with your XRP bags, and most importantly, what the smart money is doing right now while retail holders panic sell at the bottom. This is March 12th, 2026, and this is the full unfiltered story. Let us start with the hard numbers, because the numbers here are genuinely brutal. XRP hit its all-time high of $3.65 in July 2025, riding a wave of regulatory clarity, ETF launches, and institutional excitement that had been building for years. 7-spot XRP ETFs went live. Ripple's SEC lawsuit was settled. XRP was even added to the United States Strategic Crypto Reserve. Everything that bulls had been waiting for finally happened, and the price still collapsed. Today, XRP sits near 1.37. That is a 62% drop in under 9 months. Year to date, XRP is down approximately 28%, about 36.8 billion XRP, roughly 60% of the entire circulating supply, is sitting at an unrealized loss right now, totaling around 50.8 billion XRP's net unrealized profit and loss indicator has dropped into capitulation territory, even lower than where it was during the July 2024 bottom, when XRP traded near $0.50. CBS News. If you bought above 140, you are underwater, and so is the majority of the entire XRP community. That is not a small number of unlucky traders. That is the statistical reality of this market right now. Now let us talk about the whale dump, because this is where the story gets complicated in a way that most channels are not explaining properly. Since XRP's 365 peak in July 2025, whales have cashed out an estimated $6 billion. The most recent data shows $652 million worth of XRP, roughly 472 million tokens, flowing into Binance in just 1 week in late February. That is the largest single-week inflow of 2026, and it reversed months of declining exchange reserves. CBS News. When tokens flow onto exchanges in those quantities, it means one thing: they are positioned to sell. The supply squeeze narrative that XRP bulls had been riding since late 2025, the idea that declining exchange balances meant less selling pressure ahead, that narrative just broke down completely. Binance reserves are ticking back up. Every bounce attempt XRP makes runs directly into a wall of whale sell orders sitting above the price. These are wallets that bought XRP below $1 years ago and are now sitting on enormous profits even at current prices. They do not need to wait for $3. They are perfectly happy exiting at $1.40. But here is where it gets genuinely interesting. And this is what separates real market analysis from pure fear-driven clickbait. Because at the exact same time that some whales are dumping onto exchanges, other large wallets are doing the complete opposite. Recent data shows some whales added 1.3 billion XRP in early March, so the picture is mixed. CBS News. And according to on-chain data from Glassnode, XRP's exchange balance currently sits at 12.93 billion XRP, down 0.15% since February 16th. Declining exchange inflows like this typically indicate that holders are opting to keep coins off exchanges rather than positioning for immediate sale. Fortune. So you have two completely different signals happening simultaneously. One group of large holders is moving tokens onto exchanges, ready to sell into any rally. Another group is moving tokens into cold storage, signaling they have no intention of selling anytime soon. This is what a real market transition looks like. It is messy, it is contradictory, and it is exactly what happens when a market is trying to find its real bottom. Now, let us address the Federal Reserve, because this is the single most important factor driving this crash, and it is the one that most crypto content creators are either ignoring or fundamentally misrepresenting. The biggest risk to the XRP price right now is not anything happening on Ripple's network. It is what is happening at the Federal Reserve. Kevin Warsh, Trump's nominee to replace Jerome Powell as Fed chair, had his nomination officially sent to the Senate on March 4th. Warsh wants to aggressively shrink the Fed's $6.5 trillion balance sheet by actively selling mortgage-backed securities, a move that would pull liquidity out of financial markets at a time when crypto needs more of it, not less. When his nomination was first announced on January 30th, the XRP price was already sliding from its early January highs, and the Warsh news accelerated the sell-off as the broader crypto market dumped on fears of tighter monetary policy ahead. CBS News. Here is why this matters so deeply for XRP specifically. Investors had been hoping that Trump's nominee for the Fed chair position would be a clear proponent for cutting interest rates, but Warsh has been a notable critic of quantitative easing and has the potential to be significantly more hawkish on rate cuts than crypto holders were hoping for. As another source of bearish pressure, transcripts from the Fed's most recent meeting showed that members of the board were hesitant to cut rates and open to the possibility of hikes if new developments call for it. CBS News XRP needs a risk-on environment to rally. It needs cheap money flowing through the financial system, and investors willing to reach for higher-yielding, higher-risk assets. What Kevin Warsh is proposing is the exact opposite of that environment. What he says in his Senate confirmation hearings about rate trajectory will set the tone for every risk asset on the planet for the rest of 2026. And XRP will not be immune. Stir geopolitics into all of this, and the picture gets even darker. Broader market sentiment has deteriorated since March began, primarily due to escalating geopolitical tensions in the Middle East. This has kept XRP's price stuck in a sideways trend, hinting at a continuation of its historical decline. Fortune. Every time a major geopolitical headline drops, investors rotate out of speculative assets and into safe havens like gold and government bonds. XRP is not a safe haven. It is one of the most volatile assets and the most volatile asset class on Earth. It absorbs geopolitical shocks harder and faster than almost anything else in the market. Add one more layer on top of all of this. Gains for precious metals have siphoned bullish momentum away from crypto. Growth for stablecoin adoption has shifted narratives about the use of other tokens as mediums of exchange. Investors are not getting the interest rate cuts they hoped for this year. CBS News gold is up significantly in 2026. Silver is breaking through multi-year highs. When precious metals run hot, they compete directly with crypto for the inflation hedge and store of value narratives that drive institutional allocation. Money that was supposed to flow into XRP is sitting in gold ETFs instead. And the stablecoin issue is real too. The more that global commerce adopts USDC and USDT for actual payments, the weaker the narrative becomes that XRP is uniquely positioned as the world's payment rail. These are not terminal threats to XRP's thesis, but in a risk-off environment, they create real headwinds that bulls cannot simply wish away. So, is $1 actually coming? Let us be precise about this. XRP's real structural floor sits at $1.27 to $1.30, where 443 million XRP in cost basis creates buyer defense. XRP's ceiling is blocked by a 2 billion supply wall at 158 to 160, where holders will sell to break even. Bitcoin plunging below $60,000 would break XRP's floor regardless of any key catalysts, given that BTC and XRP correlation runs at 0.84 with 1.8x volatility amplification. Fortune. If Bitcoin breaks below $60,000 and stays there, XRP follows. The $1 level is not impossible. It is a real technical target if the broader market deteriorates further. A failure to attract new demand could send the token toward $1.11, while a bullish reversal opens the door to $161 and higher. Fortune. But here is what the doom narrative consistently leaves out. What makes this drawdown genuinely different from previous ones is what XRP had going into it. The 2018 crash happened when Ripple had no regulatory clarity, no institutional products, and no real adoption beyond speculation. The 2022 drop happened in the middle of a live SEC lawsuit that froze XRP's access to major US exchanges for years. This time the lawsuit is settled. 7-spot ETFs are live with $1.44 billion in cumulative inflows, and XRP was named to the US Strategic Crypto Reserve. XRP has never entered a drawdown from a stronger fundamental position, and that changes what kind of recovery is on the table once the broader market turns around. CBS News, Bitcoin has tested the $72,000 to $75,000 zone multiple times in 2026 without breaking through. That range has been a ceiling since late 2025. But about 1% of Bitcoin's circulating supply was accumulated between $72,000 and $80,000 before it crashed from its $126,000 peak, meaning there is almost no selling pressure waiting above $75,000. If Bitcoin pushes through, it could move to $80,000 quickly, and XRP could ride that wave to reach even larger percentage gains. SBC Gold. The last time Bitcoin broke through a resistance level this significant was November 2024, when BTC cleared $75,000 for the first time and eventually ran to $126,000 by October 2025. XRP went from 0.50 to 365 during that same period. The leverage works both ways. Seasonality data shows that over the past 12 years, March has delivered an average 18% return for XRP, making it statistically the strongest month in the first quarter. While past performance does not guarantee future gains, historical trends matter. CBS News. The signals to watch right now are clear. XRP needs to reclaim 1.42 with volume above $4 billion daily. Bitcoin needs to clear and hold $75,000. ETF weekly inflows need to return above $10 million. Until all three of those things happen simultaneously, this market stays dangerous for new long positions and deeply frustrating for existing holders. But the setup for a major recovery is building beneath the surface, and the smart money accumulating quietly into cold storage right now clearly believes the next big move is up, not down. The only question is how much patience you have left before it happens.